Morning all. How are we all doing? How is everybody this morning? Morning, Pop DJ, Harold. How is everybody? Happy Friday. No news Friday. Nothing going on today. Crap. Rubbish. Dead. We've had the retail sales and that's it for the day. So, might as well go home. Happy Friday, Rodrigo. So, so dead day today. We've had overnight news for pound, which is the GDP. Retail sales, which came out at 0.5, forecast to 0.6. So we pretty much got what was forecast. So the pound, I got out of my pound New Zealand short this morning. So there was an entry up there this morning. Switch over to 4 hour because it's a 4 hour entry. So that was the entry. And I'm out of that. The reason I've got out of the pound New Zealand short fairly early is 0.4%, but this New Zealand dollar move, obviously the weak New Zealand numbers on the interest rates, I'm not sure whether or not we're going to come and test this propulsion gap. So ordinarily I would usually hold it down to the propulsion gap, but this is an unexpected news event, and there's a good chance that this New Zealand dollar will continue to weaken. So even though we're expecting a weak pound, the New Zealand will probably be weaker because they've done an unexpected interest rate drop. So I didn't want to get greedy on it, so I thought I'd just jump ship. I am also holding Euro New Zealand short. So it was not so much overexposed, but the Euro New Zealand and the Pound New Zealand are going to move very similarly. So I've got exposure here. Didn't want double of the exposure. So if it does go wrong and price pushes up because New Zealand dollar dramatically drops, I didn't want two lots of exposure on the New Zealand. So I've just shut half of it out, taken the money. Rest of it's running. There's no news running today to drive anything particularly hard anyway. Pound Swiss got into yesterday as well. I said about this Pound Swiss trade looks really good. So I decided to jump in. We've got this monthly low here. Last month's low there. Week before's low there. So there's a very good support resistance zone here, where potentially if we're going to continue this downward market structure, this is where we would potentially see some sellers entering the market. So I've gone short Pound Swiss there. Swissies, I don't want to take any more Swiss. So I'm happy to take this £1 Swiss trade manually, which I've done just using the buttons. Just gone short because it is an RSI extension, but the EA isn't running on Pound Swiss. So I'm going to manually manage it. So I'll be watching this basically to manually manage the trade myself. So that's it. Nothing much else today. Might as well go. We had Bullock speaking this morning. As you can see by the ADR dashboard, there are no ADRs today. There's no movement off of that. We weren't expecting really anything to happen off of the back of that. RSIs, there's a few which we'll go through as well this morning, but very quiet morning so far this morning. We've had this move. Whoops, wrong one. Move up on the Pound Swiss yesterday. So if you look at all the pound pairs, most of the pound pairs had a little bit of a rally yesterday off the news. So the pound is obviously bearish. So I'm not really got a problem being short on this Pound Swiss trade at the moment. But really nothing much moved yesterday. We just kind of started undoing what we had done from the week. So I'll whiz through all the pairs this morning anyway, and we'll have a look at everything. Morning, Franco. Morning, Virginia. Morning, Bush. Which can't say your name. So yeah, yesterday Dow got stuck in the Dow, couldn't get out of that. The Dow was awful yesterday. So that was yesterday's opening range breakout on the Dow. It literally went long at the open, went short at the open, came back in, sat around inside the opening range area for most of the day and ground up. So it's about $250 loss on that one yesterday. Same with the DAX. Yeah, same with the DAX. Couldn't get out of the DAX yesterday. It flew after the news, on the news, but yeah, dead day yesterday. Rubbish. So we'll see how we go this morning. We've got 7 minutes till the open. So we'll see if we get any volume. But this week we've had very, very, very light volume at the open. It's been a tricky week. It's been profitable, but it's not been great. It's just trying to squeeze something out of it. So we'll watch the market open when it opens. So quick update on the RSI2 strategy. Got out of that yesterday at the wrong spot. Would have been nicely in profit today. So I took a bit of a loss on that yesterday. I made a profit yesterday, but just sitting there waiting for stuff to happen. 12.5 grand banked this month on that. So that's pretty good. Hedging strategy. I got out the hedges yesterday. So still just ticking along quite nicely, but that's because there's not a massive amount of movement, isn't it? Morning, Mark. So RSIs this morning. The only extensions you've got above the 70 level are the pound Swiss. So pound Swiss, obviously, on the hourly, got extended yesterday above the 80 level. We're holding there at the moment because we're just going nowhere. And obviously that is also extended on the 4 hour. So good opportunity to get in short on that one. So we're just looking for that pullback off of the RSI extension there. And obviously continuation of market structure short. We need a little bit of strength on the Swissy would be nice, but pound should weaken anyway. And pound yen is the other extension that's got some movement. So we're up in the 80 level on the pound yen. So good looking short opportunity if you want to get into the yen. I'm still steering well clear of the yen at the moment. I don't really have any bias on it. I don't know what it's doing, where it's going at the moment. After a move like that, it's very hard to call what this thing's going to do. And as you can see, for the last week, it's just flagging back at the moment, pulling back on this leg. So the bias on this thing, no idea. I have no idea if the market's going to now pile into the yen or not. Doesn't seem to be any consensus anywhere in the market as to what the yen is going to do next. So you've got a very, very large range to play with there. That it could go absolutely anywhere in for any period of time. Just no idea. So yen's could start working as normal, maybe not. So I'm just leaving them off the agenda at the minute until we get some clarity really as to what the market's going to make with this new regime of interest rate rises that they're starting to do in Japan. And obviously the back of this intervention, which was obviously it's the biggest intervention in history for the Japanese. So, you know, that's COVID. No, sorry, that's Liz Truss. You know, going back to COVID, yeah, we had a move like that in COVID. We had a move like that when Liz Truss intervened. That is bigger than both of those two, pretty much put together, that intervention move. That's never happened. So what happens to the yen after a move of that magnitude? No one really knows because we've got no precedent for it, have we? So it's the kind of thing, if you want to trade the yen at the moment, you just need a good stop loss strategy, but good luck making money out of something that's literally just grinding sideways. Just a mess. No, whole thing's a mess. It's still going to move on the other currencies news though. So really fundamental trading on this is probably your best bet on anything yen based. So buy or sell the news based on what comes out. Really, it's all you can do with that. Technicals are absolutely useless on it at the moment. Market's opening in 3 minutes. Other than that, we've got a couple of other extensions: euro pound, New Zealand yen, euro yen, and Aussie yen. So you can see everything basically yen based is weak at the moment. So it's all kind of grinding, though. Not this, you know, elastic band theory and stretched markets are large movements. This isn't a large movement. This is just a grind, basically. So when you're grinding up to these levels, they're not the best setups for needing to take profit on them, because they can just sort of hold it and then move it again and then hold it and then move it again. And all you're going to see is that sort of action. So tricky yens. But yeah, nothing else to look at there, really. So it's just a case of we'll whiz through all the pairs this morning and see where we go. But we'll wait for the market to open first of all. We've got 2 minutes. Overnight news, we had obviously Bullock speaking, Orr speaking, and retail sales. The only news we've got this afternoon is building permits. We've got University of Michigan sentiment this afternoon as well. So UOM is very hit and miss. Sometimes it moves it, sometimes it doesn't. With this University of Michigan, I don't think it's really the UOM that actually moves the market. I think it's the fact that it's Friday afternoon, it's 3 o'clock. They need an excuse to dump and pump to get profit targets hit. And I think they just used Friday afternoon's Michigan release just to place the orders around that time, because there's a little bit more liquidity available. So I don't think that actually moves it. But overnight news, as you can see, scrolling through, not a lot. We've had Orr and Bullock speaking from New Zealand, Japan, and Australia. They didn't say anything of any impact at all. So there was nothing really came out there overnight. So it's one of those days, just nothing happening. So we just have to sit here and hope the market decides to do something. I'll look at the hedging account in a minute. There's no point in taking any hedges today because there's no news, really. So whole idea of that account is to play the news, basically. FTSE's selling off, so is the DAX ahead of the market. You can see there's no volume pre-market. We got gaps. Got a gap up there. I get the feeling it's going to be another quiet open, he says as it flies to ADR. Morning, Monkey, Neo, JC, how we doing? 5 seconds to go. Okay, short DAX and short FTSE as well. Quick spike down there. So yesterday on the indices, scroll out a little bit. So obviously, as you can see, yesterday we had the biggest day on the indices we've had for a good week or so. So we had some very nice movement yesterday, but that movement that we saw yesterday was off the news that we had sort of yesterday. So I don't think really you can look at that and say market's coming to life. It's more of a knee-jerk reaction yesterday. So there is a chance of a pullback today to come and retest the highs that got broken. So you can see these propulsion gaps that we got put in. So there's a good chance of coming back and retesting those today to the downside. And then if it's going to continue this bullish grind, obviously they'll just add more in there. So we'll see if we get the break to the downside. If we get a break to the upside, you're coming up at the moment right into potential resistance to the upside on the DAX. So there is potential for an immediate sort of pullback off of those highs. And if it does manage to break out today, ADR is up there and we're coming up into all these highs up here. So there's plenty of room to the upside and to the downside on both of these today. FTSE, we are sort of stalled here at the top of the propulsion gap. So this was obviously the big sell-off, broke those lows. We hit that like a brick wall yesterday, obviously, and stopped. So it looks like there is selling pressure wanting to sort of hold this level, but we'll wait and see. I think that's more likely the move today, but we'll wait and see what happens at the open. But upside within ADR today, you've got that monthly high. So that's the high of last month, which is there. That's ADR. So there's absolutely loads of room to the upside to get a breakout today. But obviously, we're coming off the back of a kind of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day rally to a 2-week rally, basically. Things due a pullback, and they're going to want to take some profit off of this before they put a new leg in up. So makes sense to go short today, but we'll see. Would you mind going through all your accounts, please? I've only got one. Oh, well, this one. I've got this one and my position trading account. I'm not doing any prop, no. So I only trade one position trading account and the scalping indices. That's it. All the other accounts I've got are demos, basically, to test strategy. So the RSI2 strategy, this one, this is a demo. Because I'm just I'm forward testing the strategy. And the hedging account, which is the other one, which I've just started up, that's demo as well. It's not real account. RSI2 is on position trader EA. Yeah. So this is running on the position trader EA. Although I have got another EA that I've developed for a colleague, friend, which is why I started looking into it more. But his EA works in a very different way. It doesn't work in a very different way, actually. It works in a different way. In the fact that the exits are different. But again, that's just a strategy variation, really. So, right. So coming up to 5-minute open. So that is the open on the FTSE. That is the open on the DAX. Absolutely dire again today. Tiny, tiny, tiny open. So we've got 27 pip open there. Bit better on the FTSE, over 10%, and we have broken that low as well, which is good. So the pre-market lows have gone. So it does look like we've got some selling pressure. Let's just see if we can get it sustained. So target-wise to the downside for me today, 3R is probably a little ambitious. I'm just going to move that up just over 2R there, just above these highs, in case we hit buyers in that zone there. I'll leave the 5R target on because obviously the trailer will get me out in a second. It's unlikely we're going to do a 5R run. Never know though. Could do. DAX is dead. Morning, Gregors. Fairly big spread on the FTSE today as well. There's not a lot of liquidity about. Summer trading. Although summer trading is, the whole premise of the opening range breakout EA strategy and stock index hedge strategy is opening momentum. As long as there is direction, it doesn't matter if the momentum is weak, because obviously we're looking to move to a target. So whether we get there, which is what we like, within sort of 15, 20 minutes, which is the norm for the ORB strategy, or it takes 2 hours to grind its way there, that's fine, as long as it just picks a direction at the open. But summer trading, you just don't get as much volume anywhere. It's terrible, which is why we get slippage a lot in FX, especially around news events in the summer, because it's just not the liquidity there. You can see we gapped up again, look. Yeah, so 5 minutes after the open, we're already gapping. We're already reaching for orders because there's just not the volume there to get it done per tick. It's not good. We'll come back to that in a minute. We'll see how we go. Franco, while I was burning books, you mentioned about how gaps are formed. Yeah, so by the right terminal. So yeah, when the market gaps, basically, intraday, you mean on the 5 minute time frames, on low time frames. So all this is, when you're seeing these gaps here, so there's the close of that candle. Yeah, so that candle closed there, and then it opened up there, closed there, and then it opened down there. So basically, these gaps that form are because of low liquidity. So the way auctions work in markets, all markets, is you have a bid and an ask, and someone is looking down here to buy at this price. Someone here is looking to sell at this price. Yeah. Normally, you've got tons and tons and tons of liquidity sitting at all price levels. So every single tick, every single price point has got volume and liquidity at it. So for a transaction and a tick to occur, the guys that want to buy here, yeah, either have to step up and take a buy at the level that the sellers are asking for, or the sellers have to step down and sell at the price that the buyers are asking for. So either he gets the price he wants or he gets the price he wants. As long as they're both sitting there stubborn, it doesn't tick. So that tick that you see is basically the sellers going, all right, we'll take one of your buys. We'll take one of your buys. Or the buyers going, we'll take one of your sells. Yeah, that's the way it tends to work 99% of the time. When you've got low volume, yeah, you might have a load of sellers there and a load of volume there. But at this level, there's no one looking to buy. So you have to go down to the next level where there's a load of money. Yeah. And the sellers have to jump down not one level, but 2 levels to get their order filled. If you want it filled, we're going to sit here and we're not moving. So either you come down here or you don't have your order filled. It's your choice. So the sellers go, all right, we'll come down and get your order. And that's where you see gaps appearing. And the reason they appear is because there's just a complete differential in I don't want to move up and I don't want to move down. And we're not going to meet in the middle. So that you get a gap. Yeah. So when you see the market open, so this is the market open, the most volatile, heavy volume period of the day. If you're gapping when the market is open at the bell, there isn't any volume. If you go back and look at other days on 5 minute charts, you won't find gaps anywhere because there's a huge volume going through the market and there is price points. People just want orders filled and they will take any price they want. So there's orders everywhere. You know, and this is why you get gaps in stocks. So the stock market closes. Yeah. And then it opens the next day and it gaps up. And the reason it's gapped up is because the first batch of people that are willing to sell the stock today are willing to sell the stock at that price. This is where we were transacting last night, but something's changed that everyone goes, no, I want to set it up here now. And they'll try it. And this is why often gaps get filled, because they try that and everyone down here goes, I'm not buying it up there. And they go, all right, what about here? What about here? What about here? 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 Yeah, this is exactly where I said I wanted to buy it at. Gap filled, market moves away. Yeah, so that's the theory behind gaps. It doesn't always work that way because sometimes there is a reason for that gap. Yeah, so if you get a news event, if you go back to yesterday, where was the news yesterday? Are we even in yesterday? Where was the news? Is that it? I didn't get a gap. Anyway, but yeah, that's why you get gaps on news because everybody pulls their orders when the news comes out and goes, actually, I'm not going to sell here anymore because as I don't want to sell it because it looks like it's going bull. So the buyers go, right, we want to buy everything that's available. And these guys have pulled all their orders up to here. So they go, right, well, that's the best price we can get. So it gaps up to that price at the news. It's exactly how the market works. It's literally volume of buyers meeting volume of sellers. The reason price goes up is if there is more of these guys and less of these guys. If it wants to go down, there needs to be more of these guys and less of these guys. And to say guys, I mean volume. Yeah, it could be one guy there and one guy there, but this guy's selling 200 million. This guy's buying 100 million. He's going to buy all of his orders, and then he's going to step down to the next guy who's got 50 million. He's going to eat all of his orders, and he's going to step down to the next guy that's got 50 million, eat all of his. His 200's gone. So now all the buyers will take control and tick back. Yeah, market structure, weight of orders. If the sellers are in control, it will go down. When the sellers have decided they've had enough and they want to take profit, it will pull back up. And then the volume of orders will increase and go down. And this is why market structure exists. It's all to do with the market. It's exactly the same as apples in a marketplace. You go into a marketplace, there's 3 fruit sellers selling apples. He's selling it for 50p. He's selling it for 55p. He's selling it for 60p. Who are you going to buy your apples from? The 50p guy. When the 50p guy runs out of apples, you're going to buy it from the 55p guy. When the 55p guy runs out, you're going to buy it from the 60p guy. When the 60p guy runs out, there isn't any more apples for sale. So if you're sitting there wanting to buy apples, you buy it from the best price available. If someone comes in and says they're £1, you'll buy it for £1. This is exactly the same as any market on the planet. Crypto, stocks, forex, indices, it's all the same stuff. It's basically supply and demand. Somebody wants to buy something, someone is offering it a price. This is why I say all the time, the markets are completely random, and that any pattern you've identified in the past will work if the pattern repeats itself. But the pattern's not going to repeat itself because the pattern is being made. The pattern repeats itself because of the buying and selling actions of human beings and volume and weight of orders. But it will never appear in the same way. Like I say, the order of candlesticks that you see on this chart here has never happened in the past, and it will never happen again. The actual order that they get placed in, the volume, $7 trillion a day going through this market every day. The order that those orders get executed in is never the same. The volume is never the same. There's nothing ever the same every day. So you'll never find the same price action, which is the problem with backtesting. If you backtest every single one of those candlesticks, in the past, it might give you an edge, but it will only give you an edge over the period of time you've tested it. Go and do that test again on a different time period or a different instrument, and it will give you a different result, which means that in the future, you are also going to get a different result. If every time that candlestick appears, let's say there's 100 days you test over and it appears every day, if 70 of those days it went up, there's an edge there. But only over the 100 days you've tested. The next 100 days, there may only be 25 of those that go up. You don't know that, do you? Because you can't see the future. So all these things candlesticks are a representation of price over time and order flow and order volume in the selected time period. If you switch the chart to a different time frame, you're going to see the same candlestick patterns. But all it is showing you in that hour there were more buyers than sellers. In the hour after that, there were more sellers than buyers. In the hour after that, there were more buyers than sellers, and they continued to buy for 3 hours. And then they didn't do anything for 6 or 7 hours. Yeah, but that won't happen again. Something similar might. Yeah, what will happen is a rally and a contraction. Yeah, somebody was asking about symmetrical triangle patterns in the Telegram group, and I was saying how indicators are useless and patterns are useless the vast majority of the time. And they said, well, why on earth are you selling an indicator that paints patterns and symmetrical triangles? And the reason is because a symmetrical triangle is just a contraction in price. You could call it whatever you want to, and you could say, I want to use that shape, or I want to use that shape, or I want to use that shape, or I want to use that shape. Yeah, that's a symmetrical triangle. That is a wedge. That is a wedge. That is a wide contraction. That is a range. Yeah, what do they all indicate? Indecision or equilibrium in price. What happens after equilibrium in price? A breakout. Is the breakout going to work or is it going to fail? Don't know. But what will happen is something. So all symmetrical triangle patterns and any pattern recognition system is telling you is something is happening that's happened before, but what's going to happen next? I haven't got a clue, which is why in the symmetrical triangle trading video, I say it could break long or it could break short. If it's a bull symmetrical triangle, i.e. we've had a rally and we've gone into contraction, normally you get a continuation rally. Push, pause, push. Yeah, but not always. You might get a pull because the weight of orders when the breakout happens has nothing to do with the symmetrical triangle. It has to do with what the banks and institutions are doing in the hour that that break happens. That hasn't got anything to do with chart patterns. Elliott wave, market structure, yeah, will or won't work based on that. You can show me 1,000 ABC patterns that work, and I'll show you 1,000 AB patterns that don't. You'll only see the ABCs that work, and you'll go, this is the best thing since sliced bread. You'll ignore the AB oopsies because you won't see them. But the reason the ABC worked was because we had buyers, profit-taking buyers. If you get buyers, profit-taking sellers, it doesn't work. Whether a pattern works or not is down to the volume in the market placed by banks and institutions at that point in time. It's got nothing to do with any pattern. That's all I was kind of explaining the other day. You know, like you're saying, you're burning your books. Everything you learn is theory and has a probability of repeating itself. It also has a probability of failing. Yeah, there is an A, B crap. A, B, C. Oh, look, that Elliott wave pattern worked. That one didn't. It's nothing to do with Elliott. It's to do with weight of orders at time of day. M pattern reversal might work, might have become an ABC pattern. That day, it became an M pattern. That day, it became an ABC pattern. Look, it's the same thing. Push, pull, push, pull. Push, pull, push. ABC, M pattern reversal. The only thing that made these two days different is the weight of orders at 2 o'clock and 2 o'clock. What happens at 2:30? Market opens in the US. Yeah, it's just volume. And it's 50-50. That's it. There you go. That's a long-winded version of why price gaps. Morning, AZ. Morning, Georges. I'm feeling so proud of myself. I probably said that wrong. Most of the trading nowadays is done by bots. Always has been. It's been algorithmic for 25 years. Exactly. But Vitaly, what difference does that make? Morning, Champagne. What difference does it make if there's a human being pressing a button or a bot pressing a button? Yeah. Quants in banks, which is what they're called, quants are designed to extract money from market movement. Yeah. They will extract money from market movement based on the available volume of money that they can extract. Yeah. Bots work in exactly the same way. You got your market stall guy selling apples here. You've got your market stall guy selling apples here. You've got your market stall guy selling apples here. You've got your bot coming in saying, my job is to buy apples, right? Used to be a human coming in going, I want to buy some apples. But now it's replaced by a bot going, I want to buy some apples. And instead of the human selling the apples, there's now a bot selling the apples. Does that change the way that price moves? No. Price can only do one of two things. It can tick up, it can tick down, or it can not move. Every candlestick that you see on a chart has three outcomes. There are only three outcomes of every single candlestick. It can be bullish, it can be bearish, or it can be an indecision candle. A bull candle has a higher low than the previous one and a higher high than the previous one. A bear candle has a lower high and a lower low. An indecision candle can be an inside bar on the previous high and low. It can be an outside bar on the previous high and low, and it can be any shape it fancies. It can be a doji, it could be a dead stone doji, it could be a spinning top, it can be, if you've got a candle there, it could be a hammer, which everyone thinks is bullish. But if it hasn't broken that high and hasn't broken that low, it's an inside bar, it's indecision. The market can only do three things. They can either agree on a higher price, a lower price, or they can agree we're happy where we are. The outcome of every candlestick is determined by the volume of price on that 1 hour, 5 minute, 4 hour, day, 30 minute, whatever time frame you're looking at, tick. Doesn't matter. The outcome of every candlestick is random based on movement by either a human being or a bot. The fact that it paints completely random every single time doesn't matter if there's a human or a bot involved in it. If the quants are trading 100% of today's market, the quants will trade in the way that they need to make money. And if the quant needs today to tick up 20 times to make money, and yesterday it only needed to tick up 6 times to make money before its job was done, that's what the bot will do. It has nothing to do with regular movement. Every open on this is different. The open on the pre-market today, the size of that candlestick, and the preceding 4 candlesticks in that price formation haven't happened before. Go and find it if you want to. I don't care how long you spend. You won't ever find exactly that happening again in the past. So if pattern recognition was any use to you whatsoever, the bots would paint the same thing every day. They don't. They never have done. They never will. Because the volume of orders on each bot, each quant, of which there are hundreds, is different. When this market opens on the FTSE, Barclays have been told to buy a load of stock in BS, I don't know, whoever, British Airways, yeah? HSBC have been told to sell a load of stock in British Airways. Citibank have been told to buy a load of stock in British Airways, and so has Royal Bank of New Zealand. Yeah. Tomorrow, the volume of the weight of orders that those banks have been asked to execute on behalf of their clients will be different. Therefore, every quant order will be placed in a different way. Random. Totally random. All you have is risk and management, and hoping the price moves your way. Still holding my euro odds short. It's been a pretty bearish week, but there's some clear support. Not sure if I should exit now or wait for the monthly low. It's not gone anywhere. Friday, Thursday, Wednesday, Tuesday, Monday. We opened there on Monday. That was Friday's low. So that was low of last week. We opened up, tested the low, sort of tested the low, sort of tested the low. We're sort of testing the low. Hasn't gone anywhere. I can't answer that. Euro is bearish. Aussie is bullish. Yes. It should, fundamentally, it should be short. If it breaks that low, you're going to find all the buyers at these levels will be flipping short. So you're going to run into the 2-week low, and then you're going to run into a previous monthly level. I mean, it's just nothing happening, is it? This week's just dire. All I would say is, if you're happy with the money, take it. If you're not happy with the money, hold it. It may go down, it may not. Again, I've no idea. What's the order flow going to be on Monday? Nobody knows. Did you say buyers profiting buyers or buyer profit sellers? Did you say buyers profiting buyers or buyer profit sellers? I was probably explaining market structure, wasn't I? So, yeah, so basically every push has a pull. The pull is generated by profit taking. So banks and institutions have multiple types of orders that they place. Yeah. So when a bank places an order to go long, In that order will be commercial orders, speculative orders, and hedge orders. There's other orders in there as well for other means, but those are the three main types of order that are placed by banks and institutions every day. Commercial orders are executed at any price they want to, because it doesn't matter. Basically, Microsoft phone up and say, right, I've got a load of euros, I want them changed into Oz, please. Execute this one, it's 200 million euros, I want them changed into Australian dollars. The bank's job is to execute $200 million worth of orders for Microsoft today across the market. There will be speculative orders in there, which is the FX desks, which are basically their job is to make money using your money. So the bank's money is used to make money. So they will place orders that they will get into and get out of over a period of time. They will take profit on that move. So they will get in low, they will get out high, and they will execute the opposite side of the order. Hedge orders are placed in the market, and it doesn't matter what price they get placed at because they don't care. It's basically hedging another position. So it's an order just to get in and secure the profits on another order or secure loss on another order. So those ones will get removed as and when the market deems fit. So when you see any movement in the market, a percentage of that movement will always get taken out of the market, usually the speculative part. So if that much is commercial, that much is speculative, and that much is hedge, that much, the speculative part, when it gets to a price that is they're happy with, will be pulled out the market. I.e., buyers, when you're buying, the price goes up. When you want to close your buy position, you sell. Yeah. So when you buy something, if you want to get out of that buy position, when you press the close button here, what the broker is doing is issuing a sell order on your behalf. So when the market's pushed up, it will pull back a percentage of that move, which is the profit take on the move, which is the sell order. How much of that move has to be profit taken? Nobody knows, which is why you get pullbacks and which is why people use fib levels. You get either a big move and they take a small portion of it before they continue, or they take a medium portion of it before they continue, or they take a lot of it before they continue, or the entire lot at that point might decide to be unwound, which is where you get an A-shaped recovery or V-shaped recovery, depending which way the market's going. So this is the whole theory behind position trading, elastic band theory. When the market has been continuously going in one direction, it will exhaust itself. Yeah. So there won't be anybody left to sell up there because these guys have bought the lot and everyone's gone, I've sold everything. I'm in water. I'm not selling anymore because I'm in drawdown. All right. Well, we can't buy anymore because there's no one left to sell. So we'll go the other way. We'll take profit on our move. And then the sellers start to make money. And then the sellers become profitable and they take some of their profit off, which is what happens when the sellers need to get out of their positions. They have to become buyers. Then the market moves up again. And all the people that wanted to buy see the market go up, so they enter the buying cycle. And then they go, I've had enough of this. I'm going to get out. So I'm going to sell mine. Market structure. That's basically how the markets work. And it's totally random. There's 10 central banks and institutions that have enough volume to move the market on a daily basis. And it's the volume and weight of their orders, $7 trillion a day, that makes this thing go up and down. But where it's going, when it's going, no one on the planet can tell you, not even the central bank. You phone up Barclays now, speak to the FX desk and go, where's the market going today? They go, I don't know. We're going to do this because our books are balanced in this way that will become profitable for us. But the thing with the banks is they can move the market. If they, don't forget, the commercial desk has just been told to execute 200 million euros worth of transactions on behalf of Microsoft. They have to put 200 million of buy orders in the market today. Where's the market going? Up. What do the speculative traders in Barclays know? Commercial desk going to dump a load of euros in today. Okay, we'll get on the back of that. What are they going to do? Buy. What's that do? Add more volume. Goes up. The hedge guys that have got to, on the hedge desks and the pension fund desks, that have got to place orders on behalf of the hedges and the pension funds, they're sitting there going, we need to take some long orders at some point. When are you moving it up? Well, we're going to move it up today because we've got a load of euro moves and we've got a load of speculative orders coming on the back of us. Okay, well, so it's going up today, is it? How much you got? 200 million. So they'll be watching it going, when 200 million is coming to an end, they will then place their hedges. Why? Because they're going to get a better price. And then the market's done. Market closes. They pass it over to the next session, which is New York. New York then goes, repeats the process. New York closes, they pass it to Asia. Asia does its thing, closes, passes it to London. That cycle repeats itself. The bank's just executing business on a daily basis. There is no nefarious thing going on under the hood here that they're like, oh, they can see my retail stop. Look, they took me out because they could. They don't even know you exist. We're just such an insignificant fly to them. That's how it works. Market reversal alert's pretty decent on 4 hour. Yep. Market reversal alert's pretty decent on 4 hour. Well, this one, if you're talking about that one, it's all right. I don't know. Explain front running. Front running is basic. Well, I don't know. I don't really know much about front running. It's basically driving price up. It's what the market maker desks do, isn't it? I don't really know much about it. You're talking more about futures order flow, which is a slightly different thing. Front running the market is kind of all the banks and institutions can do. It doesn't affect us. You don't need to know about stuff that doesn't affect you at the end of the day because you can't do anything about it, which is why I stopped worrying about price. I need to know which way the market's going. Sellers are in control at the moment. Buyers were in control back there. And I need to know roughly where it's going to be headed. It's either going up there or it's coming down to here. I have no way of knowing which way it's going to go and when it's going to go there. But as long as you've got a plan, that's how you get money out of the market. How the function works underneath the hood to get you from A to B is irrelevant. When you get on a train, do you need to go to talk to the driver and understand how the engine works on the train? Doesn't matter, does it? What you need to know is the train's going to go that way or that way. As long as you are on the direction of travel that you want to be on the train, that's it. That's all you have. Same with trading. If you press the buy button, you want the train to go that way. If you press the sell button, you want the train to go that way. If the train goes to that way, it's going to hit a dead end stop at some point, which means that if you get on and off and on and off and wait for it to go back in the direction you want, you'll make money. But good luck predicting which way the train's going to go. If it's got an engine on both ends and 3 carriages in the middle, when you get on that thing, it could go either way. And the only way it's going that way is if the banks want it to go that way. And if it goes that way, the banks want it to go that way. If you're not a bank, you are a passenger. Still long Aussie US. So I'm on the same boat. Aussie US. Yeah. Bias is right. So yeah. You've got this big accumulation here. Yeah, which if you look on a daily chart, this area here, it's potentially going to do that. We haven't managed to make a new high this week. Could go either way. Hold it if you're happy, take it if you want to. So inside bar on a higher time frame is a range on a lower one. Yes, exactly. A symmetrical triangle pattern on an hourly chart is a number of inside bar formations on a lower time frame. Yeah, so if you so if you find a symmetrical triangle pattern on so that one there, for example, let's find see if there's one on a going on at the moment. What's rangy at the moment? That's some movement this week, haven't we? Probably won't find anything much. No. But yeah, so basically to create a symmetrical triangle pattern, you need a low, a high, a higher low, a lower high, a higher low, and then we get to a breakout. So it's got five points basically, or 4 points and then a breakout point. Yeah. So all it is whatever time frame you're looking at, if you've got a big candlestick followed by a smaller candlestick followed by a smaller candlestick, which is known as a 2IB setup. So it's a 2 inside bar. So it's an inside bar and an inside bar. It's not very well drawn, is it? Yeah. That creates on a higher time frame a symmetrical, or no, lower time frame, a symmetrical triangle pattern, or higher time frame rather. It's contraction. It's all it is. It's contraction. How you know, and again, everybody tries to formulate strategies around contractions, which is quite right. If you are a breakout trader, you are looking for a contraction. So you'll be using Bollinger Band contraction. You'll be using inside bar setups. You'll be using, I don't know, all sorts of things you could use for it, really. But channel contractions, there's all sorts of stuff. But symmetrical triangle patterns, perfect. But all they're doing is they're saying price hasn't moved very much over the last X. So when it does go, it's probably going to move a lot, because all an equilibrium is, or a range or a contraction in price is happiness with the banks. So if the banks have got to execute 20 million short and they want to buy 20 million short on this side, as long as these figures stay roughly the same, every time these guys hit the buy button, there'll be someone to sell. And it will just go up and down and up and down. And they'll be like, yeah, this is brilliant. We are just making money. We're getting our jobs done. Everybody's happy. And all of a sudden, these guys will run out of orders to sell. And these guys have now got to go and find someone to sell to, or to find someone to buy from, i.e. find some sellers. So these guys are not here anymore. The next batch of guys is up here somewhere. So these guys will move up into that area until everyone's happy and can contract. And this is why price moves like that. This is what they call price discovery. We call them breakouts. And then you go into the next range and they're happy there. And then there'll be a price discovery move, which is, can we trade down here happily? No. Oh, we're back here then. False breakout. Or can we trade down here happily? Yes. Successful breakout. Yeah. When you look at market structure, in all of these bits, there'll be that. And it's not that simple. This is really simplistic market structure, obviously. But you'll always find that sort of movement. If you zoom out on a chart. Yeah. Can we trade down here? No. All right. What about up here? Yeah. Excellent. Can we trade down here? Yeah, we can for a bit. Not happy anymore. Let's trade up here for a bit. Yeah. What about down here for a bit? Holy crap. Let's sit around here for a bit. There's always a range. Price discovery, equilibrium, price discovery, equilibrium, price discovery, equilibrium. Some people call it accumulation distribution. Call it what you like. It's banks happy. Yeah. Your job when you walk into a bank is sit down at your desk. I've used this analogy before. It's not correct. Pile of paper on your desk, which is a load of orders you've got to execute today. First thing that goes through your brain is, where's the coffee? I've got to get through this massive pile all day today. And I need this executed. The happiest thing you can have is for you to just press the button every time and make that pile shorter and shorter and shorter. And every time you press the button, someone on the other side goes, I'll have that. I'll have that. They're taking your workload away from you. Happy banks. I need to sell a load. There's no one down there. This is going to be a long day, guys. That's basically what they're thinking. You don't have a choice. It's just a business. All you're watching is a business being executed on a chart. I tried to rally on Wednesday, but got pushed down fast too. Fast too. DAX is dead. DAX isn't going anywhere. Just going to close it out then, and then it suddenly ticked down. Yeah, I'm going to close out the FTSE, and I'm going to close out the DAX. So $100 loss on the DAX if I could actually get the order closed. $300 profit, pound. I keep forgetting this is a pound account. On FTSE. So overall, couple of hundred today. It's not going anywhere. We've got absolutely no volume and no directional bias on the DAX. So this thing could just flip-flop around for hours and go nowhere. That's paid me, so done. I'm going to download every video on your channel. Okay. Good luck. You'll be a while. Front running is seeing a big order on the level 2 and trying to get positions before the order is executed. Don't do it. It's something you can't do as a human being. Banks can. You can't do it. Oh, you mean, in the order book? Yeah. The reason front running doesn't work, what you're describing, is because 90% of the orders you're going to see in the order book are not real. The vast majority of large orders in the market are spoof. So you won't, it doesn't work. I've tried it. I've got Jigsaw, which is visual order flow. And I've tried to trade that way. 90% of those orders are not real orders. So it does work sometimes. The best thing you can do is use support and resistance. If you're going to do that in futures, the best thing to do is just use support and resistance. Look at where my target was today on this. Yeah, there's a large, if you were looking at a volume profile now on the FTSE, yeah, you will see a large bulge there. Yeah, and then a big skinny bit, and then a large bulge there. Yeah, this thing's coming down in all likelihood until it hits that large bulge. In that large bulge, there will be, if you can see the order book, there will be a load of orders there. And that is because the banks and institutions want to attract price to that level. Doesn't mean they're going to execute those orders. As soon as you get there, 2 ticks beforehand, the whole lot gets pulled. Talking about quants. This is what quants do. And this is why order flow trading is now so difficult, because 90% of what you see in the order book isn't actually ever going to get executed. You see 200 contracts sitting there. When you get to that level, that will suddenly jump back down to 15 contracts. They'll pull 185 of the contracts because they're not real. What they wanted you to do was get close to it because they had a buy order on down here. This is what these blue lines are on the chart. But these blue lines are not order flow. They are actual executed orders, which the market will come back to and retest, which is why this, I think, propulsion gaps are more reliable than order flow, because order flow isn't real. Order flow is an intention to buy or an intention to sell. Propulsion gaps are executed money, orders in the market. That's there. It ain't going anywhere. It's been done. It's history. We're going to come back and use that level again. Yeah, anything you see in order flow is very hit and miss. I did a course on it with can't remember their name, but it was with Jigsaw Software, and the theory is very, very sound, but the theory sort of stopped working when the quants took over. It will work sometimes, like everything. Everything works sometimes, doesn't it? But you know, it's whether it works because of the theory being enacted, or whether it works because there is a 50-50 chance when you get to that place that it will do that. There's a 50-50 chance it won't. Everything's a 50-50 shot. Like I say, it's either going to go up or down. It can only do two things. It can only go up or down, or it can stay where it is. The edge in the market is, this edge in the market not doing anything is a bit like a casino. It's zero on a roulette table. Every now and again, the market will put in a perfect doji. The number of times on a candlestick chart you will see a perfect doji, very, very rare. It's an edge. 99% of the time, it's going to do one or two things, go up and down. So what that means is when it hits a level, it will either do that or it won't. But you look historically on this chart here, every propulsion gap, that one, that one, that one, that one, yeah, all these here, there, 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 there. I mean, every single propulsion gap that is grey on this chart is large bank order flow being retested, which is why I'm saying from here, I can guarantee you with 100% certainty, price will either reach that or it will reach that. Come back in 2 weeks' time, 3 weeks' time, 4 weeks, I don't know how long, but come back, 100% guaranteed. So if it's going to do that, you buy it. If it doesn't do that and it does that first, you buy it on the way down and wait for it to go there, because it will. Yeah, it always does. It always comes back. Anything that is painted on your chart ahead of price, i.e. orders sitting in the market that you may want to try and front run, i.e. getting before them because it's going to do that, get a better price. These may never get executed. It's an intention to buy at that level. You will see at every one of these, there is a load of order flow on a futures market. You'll see order flow at every propulsion gap. But that order flow is there as a magnet. It's not there as a, we are going to do this, guys. It doesn't work. I tried it for weeks. I did it live. It's all in the live rooms. Probably a year and a half ago. I don't know. I've got about 3-4 years worth of live rooms on YouTube. So many, many years ago. Yeah. Very hard to execute. But it's an edge. It's just an edge. It's a 50-50 edge. But if it does hit it and it does work, you do tend to get a decent amount of movement, which is what the edge is. So your stop is just above that order flow. That does work, but it's, again, it's something everybody tries to find something that works on a regular basis, and it is just a 50-50 shot. There's a guy interviewed by Insider recently. He was once the most profitable trader at Citibank, and he was saying most of the traders make money from executive customer orders. Yeah. Yeah. Think about it. It's really simple. This is why banks don't lose money. Right? If Microsoft phone up and say, execute £200 million worth of pound and transfer it into Australian dollars for me, you're sitting there on a time bomb. And you know that every time you press the button, it's going to tick up. You're in control in that bank, on that desk, with that order right now of ticking up 1, 2, 3, 4, 5, 10, 20, 30, 50, 100. You can make this go wherever you want it to. If you put the whole 200 million in at once, the thing's going to go. If you spread that 200 million order over 50 orders, it's going to go. Yeah. How quick do you want that order executed is the only decision you've got to make. And also your job in the bank and what you get paid on is how accurately you can get that price executed at what the customer wants. So if you look at this chart here, for example, you start your order here and you end your order here. The average execution price is there. If you were to get an average price there, you'd earn more commission. If you got an average price there, you'd earn less commission. If the customer gave you a target and said, I'd like to get the whole thing executed at 195,420, please, and you got below that, you earn more money. So who determines what your commission is? The other banks. If you're in Citibank now executing that 200 million order, what you get paid is dependent on how much selling volume the other banks have available that you can buy from them and at what price those banks are placing it in the market. How you execute that order today, which you get once a week from Microsoft, is never going to be the same amount of price action because it's going to be determined on what the other banks are doing in the opposite direction for Apple, Netflix, Nvidia, all the other big companies that also want a transaction done, but they want to turn Australian dollars into pounds this time because they want to go that way. Yeah. Random. Everything. It's all random. But yeah, they get paid on commission. You know, this is why I say at the end of month and end of quarter, we get these massive moves in the market. Why? Because they need to get their books balanced so that they get paid their commission. You get commission monthly and quarterly. Yeah. If you're 500,000 away from target, you'll dump a load of orders in to get that target hit because you've got a massive order book, which you can do that with. So you get a load of volume going in at the end of the month, at the end of the quarter, because all the banks and institutions are rushing to hit targets. Why? Because shareholders get quarterly reports and monthly reports on progress. So let's make the books look good, guys. It's all happening because the banks and institutions deem it so. There's nothing you can do about it, but make money out of it. You know, and if this is why I say, if the market goes against the direction that you are trading, it's going to come back most of the time, unless there's something fundamental that shifts in the market that makes it completely irrational, and that happens. So most bank orders place limit orders. Yeah. So if you, let's say, they're called, if you trade futures, you'll have heard the term iceberg orders. So an iceberg order, this is a perfect example. Yeah. Yeah. So there's an iceberg order here. We call it support and resistance. Some people call it supply and demand. Call it what you like. What it is the banks executing a large order, yeah, and executing the next part of the large order, and executing the next part of the large order, and executing the next part of the large order. And I don't care how much money you've got. I've got more of it. We're not going through this level. I'm executing orders here. They are placing limit orders here. Every single sell order that comes into the market will be bought. And then they will replace that buy with another buy, and they will replace that buy with another buy, and they'll keep doing this until they run out of buys, which is why they call it an iceberg order. A 200 million order cannot be executed in one go because no one's going to come in the market with the same volume. If they do, it's executed as what is called an OTC transaction in banks, which is over the counter. So Barclays phone up Citibank and go, I've got 200 million pound odd I need to go long with. What have you got? I've got 250 million. I'll take 200 of yours short, execute the rest of the 50 in the open market. 200 million vanishes. You don't even see it on your chart. 50 million of it gets executed. Yeah, this is what's happening in the banks. We come down here, we buy a bit more of it. We come down here, we buy a bit more of it. Yeah, we can't get through this level. So everybody else turns into buyers as well because the sellers can't make any progress. So they turn into buyers. And then the buyers down here with this iceberg order will move up a bit. And then they'll move up a bit. And then move up a bit until the order's gone. And when the order's gone, the market will be able to get through that level. That's the functionality of the chart. What you're seeing is order flow playing out over time and price. That's it. There are dark pools where orders are ready to run you over on stocks. Yeah. I don't know. It doesn't matter. What conspiracy theory you have or what theory you have on why things work is irrelevant. Totally irrelevant because it doesn't repeat itself in the same way all the time because it's random. But, you know, it doesn't. At the end of the day, you have two things at your disposal. The only two things that you have control over are the buy button and the sell button and the lot size that you enter. And then once you've done that button with that lot size, the only other thing you now have is the exit. That's it. You have absolutely no control over price. You have absolutely no control over time, i.e. how long it takes to get somewhere. But what you can do is change the price of your order by entering new orders into the market. And you can either close the order out and take a profit, close the order out and take a loss, or place another order in the same direction and move your price to a lower level. That is it. That's all you can do in this market. Every indicator strategy that you use has that, and that. So it doesn't matter what strategy you use, does it? They're all irrelevant because none of them work enough percentage to work consistently because there is no consistency in any market. It's random. Which is why strategies fail, which is why the only way you're ever going to make money in this is position trading. Because You can't, unless someone can come to me with a strategy that's got a 75% strike rate year on year, every year, I'm not interested. And if they do come to me with that, I will say, what period did you test it over? And then I will take it back to a different period and come back and tell them that the 75% was only over that period. Over that period, it made 20%, which means what's going to happen in the future? It's not that, is it? Robustness testing. Yeah, but position trading does, because we change our price. Fascinated that you have Jigsaw. I was interested to know if I should consider it's expensive. Only if you want to scalp on the futures market. The futures market and scalping in general, what I've just done this morning here, yeah, I've made 200 today. Other days I'll lose a lot. Other days I'll win a lot. There is no consistency on 5-minute time frames. You are trying to guess the direction of algorithmic price action. So all Jigsaw does is it paints order flow intention, order intention on your chart and shows you the levels that banks, institutions, and everybody has placed their intention to buy and intention to sell. Yeah. You will 99% of the time find that you can see in Jigsaw coincides with one of these black lines, one of these dotted blue lines, or one of these blue blocks. Yeah. Orders are placed at supply, demand, support, resistance, and previous order areas. Yeah. So what Jigsaw does is it paints in the future where the orders are currently placed by banks and institutions, which is where they may execute the orders. I can see there's a monthly high there. That blue dotted line is yesterday's high. I can see this propulsion gap, which is where the large orders were placed yesterday. I know if I open Jigsaw now, I will see a large block there, I'll see a large block there, and I'll see a large block there. This indicator shows me where the actual executed orders were. This is where they sold from twice. Yeah. This blue line here is where they bought from last month and sold from this month. Yeah. I can see it all on this chart. Why do I need a piece of software that costs $2,000 to show me the same thing as a $49 indicator does on MT4? It's the same thing. Supply demand is support and resistance. It's just a block around it. It's the same thing. It's an area of interest where when the market achieves that price or close to that price in the future, it has a 50-50 chance of either being overwhelmed by limit orders or there being no limit orders there. You can't tell in Jigsaw what percentage of the orders placed are real or not real until you reach that level. Too late. Doesn't matter, does it? There's 500 orders, according to Jigsaw, sitting at one price point. When you get one tick away from it, that 500 orders is still there. It could be an iceberg. So if they buy that up 3 times, buy it with them. Yeah. But if that propulsion gap gets bought up 3 times, buy it with them. This doesn't cost me $2,000 to tell me the same thing as Jigsaw does. And in Jigsaw, you have a heat map. And the heat map has, I don't know how many degrees of heat. So how do you determine which is the biggest, best one to place your orders at? That's discretionary. So how does it help you? It gives you another discretionary edge to add to all the other discretionary edges you have, which are confusing the hell out of you already. Buy, sell, get in, get out. It just doesn't matter. None of it works consistently enough, but you've got to have a system or a strategy. I use market structure because I know this is the result of banks buying and profit taking blocks of orders. Yeah, this is why I said today there's more chance of this coming down today because they've got to take some profit on yesterday's orders. Because theoretically, they're overbought on this. Price has gone too high. They'll need to take some of the stock off before they buy the stock again. Why would they buy the stock again? Because that's what they're doing at the moment. They're buying the stock. Market structure. So we wait and look at where they're buying the stock from. Where did they buy it from last time? Here. Well, if that's the last place they bought it at, if it gets back down to there, if they're still long, they want to buy some more. It's the same thing. This is why I have this indicator on my chart, all my charts, because it tells me where price is going. It's going there, or it's going, it's not. H4 is not as good. H1 is the best time frame for propulsion. Yeah. It's going here, it's coming down here. So your only decision as a trader on this chart right now is buy or sell. Because at the moment we're in contraction and it's going to break. Which way is it going to go? Is it going to test that one first or that one first? That's your choice. It's 50-50. But instead of being wrong and going, I'm going short, if it goes there, I'm going to lose a load of money. Wait for it to go long, then add some more in and move your price from here to here. Yeah. And hope it's a false breakout. If it's a false breakout, you win. If it's not a false breakout and it continues up to that propulsion gap, add another up there and move your order price up to there. And then they'll need to profit take that leg, won't they? So get out when they do that move. We just changed the price based on where the market is going. We don't know where the market is going, but it can only go in two places. We just need to know where they're going to add the orders next time. And that's at the propulsion gaps usually, which is why everything on the chart is painted grey. Because they always revisit the place they've been to, because that's the place they've sold from. They sell it, let the buyers have some more. They sell it, they let the buyers have some more. They sell it, they let the buyers have some more. They sell it. If they're still short, when you get back to the area, you'll meet some resistance. Sold it, sold it, sold it, got overwhelmed. They flip long, retest, go. Banks and institutions are always in. They're always long, always short. They don't have a flat. You're not flat in a bank. A bank is never flat. It has a position. Same with hedge funds and pension funds. You listen to Bloomberg, listen to the end of day wrap on Bloomberg. You'll hear all the pension fund managers and the hedge fund managers that they interview, and they will be asked what their positioning is at the moment on XYZ, and they'll go, we're long. It's like, well, when did you get long? Well, we're always long or short. We're not flat, because if we're flat, we can't make money. You've got to have risk in the market. Yeah, that's the way that they work. So when you get to a propulsion gap that you were previously short at, you've made money on the move because it's gone down. When you get back to it, you'll add some more into it. If that doesn't work, you'll flip long and go with the guys that have got momentum at the moment, which is the other side. That's all they're doing. Isn't spoofing illegal? I don't know. Ask the CME. I don't know. How can you stop it? How can you stop an institution or an individual putting an order in the market and then changing his mind? Where do you draw the line? So if I put a pending short order up here, if I put a sell limit there, and as price gets to it, I go, it's going pretty hard, isn't it? I think I'll move my order up there. You can't stop me doing that. I've changed my mind. You can slap a fine on me if I do it more than X times a year, but the amount of money I'd make is way more than that fine. It's the same with the thing with Telegram, isn't it? Where the banks got caught in Telegram channels where they were talking to each other and telling each other what they were going to do. So obviously, if you know that HSBC, Barclays and Citibank are going to short the euro today, and you're sitting in Joe Blogg's bank, you're going to short the euro because these three guys are going to sell it. It's going down. So I'm going to short it as well. And then they slap a fine on you going, you're going to have to give us 200 million for that. That's no problem. I made 2.5 billion. Here's your 200 million. Where we go next? The fines never outweigh the profit made by the banks because the banks control the price. If you control the price, you control the profit. Doesn't matter what you slap on them. They're bigger than everybody. Just the way it is, isn't it? Which is why us little fish have to find other ways to extract money out the market. Time you put SAH away until middle of September. Yeah. I'll give it another, because I was off, I've been off for a week, which is why the P&L is looking a little meh at the moment. But it's not been bad. but you know, it's not been amazing. What I have noticed, I mean, like yesterday on the US indices, we only had one break yesterday. The ranges on the S&P and the Nasdaq yesterday were too small to trade, so we only had the Dow, and the Dow was a bit whippy, a bit, but that was because of the news. So I don't know. I'll give it a bit more time at the moment and see what happens. Really appreciate your behind the candles insights. Yeah, but you only know this when you look into the reasons why you lose. Most people in this industry, I think, give up because they can't do it. They don't look for a solution as to why they can't do it. I'm a programmer by trade, so whenever there's a problem, I find a solution to the problem. That's just the way I'm programmed, if you like. And when I went through all the courses, all the systems, and it's all covered in the bootcamp on day one, my background, but my background was like years and years and years of system hopping, buying courses, buying indicators, buying everything under the sun, and none of it working. And looking at it all historically and going, this all works. Why doesn't it work here? And then I was like, I stumbled into a group with a mentor that happened to have a guy that worked in a bank. And he said, well, that's never going to work because the indicators are showing you what's happened in the past and it's got nothing to do with the next movement. All you have on your side is either you're right or you're wrong. We don't take a loss when we're wrong. We change the price. And that was the light bulb moment, was the bank's telling me that you can't win. I was like, well, how do you make money then? Well, we just change the price. What do you mean change the price? Well, if we buy it and it goes down, we buy more of it and then it goes up. Oh, so if the market's random, how long do I have to wait? As long as you need to. That's it. That's all you have. You have the buy button, you have the sell button, and the price. You can decide to make a loss as many times as you like, but it's not going to help you. Take a profit all the time because that is going to help you, but eliminate the losses. And all of a sudden, you're left with profit. Whoa, that's it. That was it. That was the moment where I went, I need to look into the way that you're doing this. The problem is I can't make the price move. So what do I need to do? Look for clues as to where they have been, which is where they are going, and clues as to how extended they are, knowing that they will need to make money themselves. When banks have sold the crap out of it, they need to buy it to make profit. That's what I play. This bit, when you've got a range, yeah, like this, that bit I can't predict. That bit I can predict, because if that bit doesn't happen, the banks don't make money. And what's the only thing the banks do? Make money. So if they've done that, they have to do that to make that. So that's the only bit I'm interested in. Simple as that. That is it. Everything, every other system, every other strategy, every other course you will ever buy will try to tell you how to predict forward price movement. Anyone can flip a coin. You've got a 50-50 shot. Anyone can put a series of 5 indicators on the chart. When those 5 indicators line up and give you that 5-star short, the chances of it working is still 50-50. Don't care how many 5 stars or 10-star setups you have. The odds of your trade working are 50-50. And if you place an order in the market above your entry to say, lose me money, 9 times out of 10, it will. Because you placed an order there and you asked your broker to exit you with a loss. What do you think your broker's going to do? Take your money. His job. His job is to take your money away from you. The bank's job is to execute their orders. Your broker's job is to take your money away from you. Your job is to figure out how the hell I can do this profitably. Good luck. Just buy all my indicators, because all they do is amalgamate everything that I've done for the last 10 years. Why do banks bother using the CME? Because they have to. All stock market transactions have to be placed through the Chicago Mercantile Exchange. You don't have a choice. Forex, you do have a choice. Forex, you can do over-the-counter transactions individually. They do not have a centralized exchange. So it's a bit like when you buy a brand new television from Panasonic, you have to buy it from a Panasonic distributor, or you have to buy it from Panasonic. When you buy a second-hand Panasonic television, you can buy it wherever the hell you like, from any bloke in the street, eBay, whatever. Yeah. When you want to buy a stock, stock is controlled by the Chicago Mercantile Exchange and the exchanges that run the stocks. So you have to buy through the exchange. You don't have a choice. You can't phone up Bob and go, Bob, can you give me 25 of your shares? And he'll go, yeah, no problem. I'll sell them into the exchange and you buy them. That's the way it works. Bob can't just give you a piece of paper because it's got Bob's name on it. Yeah. And that's the reason for it. If you deregulated it, the whole stock market would be open to insider trading. So Microsoft could determine their own stock price. They could issue loads and loads of extra shares just because they want to. People would buy them, therefore the price would go up. And then they could stop the shares and buy them all back, and then the price would drop. They would be in complete control of their pricing. It's not the way it works. It's just not. But with forex, we can swap stuff. Gold, saying there's no centralized gold exchange. There are gold exchanges, but there's nothing to stop me going out to every jeweler in Sussex, Surrey, Kent, Hampshire, whatever, and buying every piece of gold they've got, apart from money. I haven't got enough. But there's nothing to stop me doing that. And I would drive the price of gold up in that area because there isn't any. I've got it all. And I want to sell it at twice the price they used to. If you want to buy something not in this area, you can go elsewhere. But if you want to buy it in this area, I want it. I want the order. Yeah. So that's how it works. Which is why I don't trade metals, because they're very heavily manipulated. They can be very heavily manipulated by any party, any central bank, any government. Russia is a prime example. Russia holds a massive stockpile of gold. And at the moment, there is sanctions. No one can buy or sell Russian gold. Therefore, there is a shortage of gold. As soon as Russia stops fighting with Ukraine and everybody lifts the sanctions, if they do, and whatever happens, we don't know. But as soon as that gold all becomes available and floods the market, the gold price is going to drop. There is no centralized place you buy it from. The man with no face is always watching. I know. That was the defense of the guy who got nicked for spoofing. He said, everybody does it. Why pick on him? Yeah. But, this is the thing, isn't it? Your job, the biggest light bulb moment, when you go and look at on the website, go and read that 5 Steps to Becoming Profitable book. It's only it's not even a book. It's like, I don't know how many pages it is. It's not many. It's hardly any pages. What's the page count on? I don't know, but there's not many pages in there. But it just explains the steps very, very quickly. It explains the steps that you go through. Yeah. And the eureka moment is basically realizing that you haven't got control of anything. That is the thing. The control aspect of a human being. You want to control everything. You want to control your car. When you're walking, you control the direction you're going in. You can control what you watch. You control what you spend. You can control what you earn to a certain extent. You can't control this. And every instinct in your human being is thinking, I need to find a way to make this happen. You can't. It's a train. The way it was explained to me is the train, which I've already explained this morning. Yeah. You get on at that station. You buy it. You want the train to go to that station. But if the train goes to that station, you're wrong. But that doesn't mean the train isn't coming back to that station. It will, because it can only go on the track in that direction or that direction. So if it goes the wrong direction for a bit, you just wait for the train to turn around. That's the thing that simple explanation of how the market works was what was my light bulb moment. So if I can't control it, what's the point in all the indicators that I have on my chart? Well, they're useless. So why are you teaching me to use a moving average shadow to buy in trends? Because you have to have a reason to press the buy button. But you have no control over the trade. You have control over the risk. That's it. You've got to have a system or a strategy. That's all you have. You don't have any control over price. Doesn't matter how many people on forums will give you a signal and say, buy this, target there. They ain't got a clue. They haven't got any control. They're buying on the back of a system with a 50% strike rate. Would SIH also work on large cap stocks like Nvidia or Tesla? Yeah, at the open. Definitely. I just don't trade stocks. But yeah, large... the problem with large cap stocks is volume. So although you want volume, you want imbalance. So where you get an area of balance, we expect an explosion. With high liquid, so look at the pound US dollar, or the euro US dollar rather. So the euro US dollar is the most liquid instrument we have in forex. Yeah, it spends a hell of a lot of time doing this because it's incredibly liquid. Illiquid stocks and illiquid instruments move more because there is less liquidity at each price point. Therefore, the price points get exhausted faster, meaning that you need to move to the next price point to trade quicker. So things like Nvidia and Tesla and the top 10 NASDAQ stocks are high liquid. So you're probably better off picking mid caps to trade. But the problem is you need enough volume so that you don't gap. Yeah. So I don't know. I've never tried it, but you can try them. But what you'll find is at the open, they are very much like the stock indices in a way. So, I mean, it might work. I don't know. Try it. Pick some stocks, but you want to pick stocks that, you know, you want to pick stocks that have got a chance of moving. And the reason most stocks don't move much is because unless there is something that should move them, they're not going to move. And if there is something that should move them, it means you need a bias. And if you need a bias, it eliminates the edge of the opening range breakout strategy, which is we don't know which way it's going. I don't know. I've never tried it. Try it. Get a demo account and put some stocks up. Might be worth an experiment, actually. Maybe I could get a Nvidia and Tesla up. I don't want to do it on this account, but I could get a demo account and stick some stocks up. Try it. It's worth a try. Give it a go. Morning, Ismet. Right, well, we've been chatty this morning, haven't we? I haven't done any analysis on anything. I don't know if there's anything. Is there anything anybody wants to look at? Because to be honest, because there's no news today, I'm not expecting a massive amount of market movement. And the fact that we're coming out the back of a week like this, you know, it's just not really a lot we can do, is there? New Zealand dollar dropped its interest rates, therefore everything should be bullish against the New Zealand dollar. We've had mediocre news on euro and pound. They haven't really done an awful lot. We've had some decent movement on news, but you know, we're still just flip-flopping around everywhere at the moment. Okay, so I haven't put a target on that. That would be my overall target down there. But I'll be watching that area there as well. Bias on this is now short. So it could go either way, couldn't it? But the worrying thing about this one, for example, is there is no upside target. That is your upside target at the moment. You've got a tiny little thing there, but that's not a propulsion gap. That's just a big candle. A propulsion gap breaks a low, typically. So that is a propulsion gap because there is an accumulation before it. That is a propulsion gap because there's an accumulation. That little thing there is part of an accumulation. So that one's not really very valid. So you've got a tiny target to the upside there and this whacking great target to the downside. So if this thing decides it is going to bounce, there is no upside. And that is when you get into dangerous positions because there's nothing to stop it. There's no sellers. There's going to be sellers up here. We know there's sellers there. We know the seller's there. That high and that high. Yeah. So when we get there, we're going to find limit orders trigger. But whether that happens or that happens, we'll know when we get there. So, you know, this thing at the moment, anywhere down there, an ADR hit, I'll close it. You know, this is where the discretionary part of trading comes in, which is why, you know, you can backtest with EAs until you're blue in the face. But what you're going to do in the real world is going to be based on what you see on the chart. The EA can't be taught there's a news event coming up soon, or the New Zealand dollar's just dropped its interest rate, so we'd expect it to be a little bit more bearish. Therefore, we should be a little bit bullish on this. If we're short, we should be reducing our targets. But the target should be reduced maybe to a resistance level, which isn't yesterday or the day before, but it's somewhere in the middle of this week. You know, these sorts of decisions are impossible to teach in EA. This is what humans will look at and go, I'm happy with that because I've had a really good week. I'll close it. EA doesn't know what a good week is. Yeah, you can teach it a number, but that number is never going to be the same, is it? So, but yeah, not, you know, just very difficult at the moment to see where anything's going. Okay, look at that exit there yesterday. Prime example of what I was talking about earlier. Bouncing price, propulsion move, broke the high, retested. They added more volume. Yeah, this exact look. High, high, propulsion move. They broke the high. Everybody that was short here flipped long here. Yeah, we broke through it. They went, screw it, we're the wrong side. Let's go long. In the orders there. We came back down, we retested it, the limit orders triggered. That's why I got out of that trade. Huge big price move, stopped like a brick wall there. Tried again, not getting through it. What's that tell me? There's a shed load of buyers there. Why? Because we've broken the range we've been sitting in for 5 weeks and everybody's long. We just pushed down into that area, which is taking profit on that move. Now we're going back up again. But everybody that sold that area is adding into that position as well. Are they going to add into it again? Don't know. But if they do add into it, where are we going? Down here. If they don't add into it, we're going up here. I don't know. I have no idea where it's going. But I can tell you it's going to do those things. So your job is to plan. What am I going to do if I press the buy or the sell button now? If it goes my way, where am I going to go? If it doesn't go my way, where am I going to scale in? That's your only job, because you can't control whether that's going to do that or that. The banks are doing that. Your job is to position trade. And that's what the EA does. The EA takes care of the whole lot. That's why I use it, because I don't want to think about that. I just want it to do it. The only understandably profitable trader on YouTube trades live every day, teaches for free, and has an EA indicators to make trading simple. Who's that? And he only gets 60 people watching the live. Crazy, I know. Nobody wants to hear it though, do they, AZ? This is the problem. No one wants to hear it. Everyone wants to hear about the system or the strategy with a 70% strike rate that makes them 700 quid a year, month, day, whatever. So, you know, it just doesn't matter, does it, what the money is? Money's relevant to the amount of money you've got in your bank. But, you know, you can't sell this. What I teach, you can't sell. Because I'm selling randomness. I'm selling you something that is, I come and look at a chart and I go, you know, this is what I say. Anybody got any charts they want to look at? Anybody ever seen me go to a chart and open it up and go, that's a long. And the reason it's a long is because of this, and this. You should be buying it. I always open up the chart and go, right, well, what's happened is this. So I can see it doing one of two things. I will never give you a single answer. I will always give you a binary answer because I haven't got a clue. And neither is anybody else. Everybody else that's selling courses and systems and strategies is selling a lie because they don't know what it's doing. The only reason I sell the indicators is because I have to support them. If I gave them away for free, which I could do, I wouldn't be doing this. The money, the very little money that I earn out of them kind of pays for the amount of time I spend in Telegram, which my wife hates because I end up with my laptop by the TV every night. But anyway, yeah, but I built the tools for myself. I built this to make my life simple, to identify market structure. That's it. So I could look at a chart instantly and go, who's in charge? That's it. That's all I built that for. I can read market structure. I do not need the indicator to tell me when there's a break in structure. There's a break in structure there. There's no indicator on it, but I can tell you that's where the break in structure is. But I don't need the indicator to show me, but I did, and other people do. Yeah. To be able to open up any chart and go, who's in control? Buyers at the moment is lovely. Who is in control on Wednesday? The sellers. If the sellers were in control on Wednesday and the buyers were in control yesterday, who's in control? Neither of them. We're in a range. What should we do with that? See if we break out of that level. That's a bit far away, isn't it? But see if we break out of maybe that level. But there's no reason to trade this. Again, like I keep saying, you don't trade from the middle of a range. You always trade from extremes. If you're going to trade any strategy, it should always be from an extreme. So when you have a range, if you want to short it and mean revert it, you sell it from there and you buy it from there. You don't get involved anywhere in here, because everywhere in here has a probability of up and down. Here, you've still got a probability of up and down, but you've also got the probability of limit orders helping your direction. If you want to be a breakout or a trend trader, you wait for it to break out and then you wait for it to get back to the previous range and then you buy it. So you always only ever trade, ideally, from levels of interest, because that's where the orders are placed. The orders are currently sitting here. We broke up, we tested it, we bought it, we bought it, we bought it, we bought it. Definitely got longs there. We pushed up, we broke that high, we came back, we bought it, we pushed up, we broke that high. There's definitely buyers here. Look what happened to that wick. Boing. Why? Because there's buyers there. We know that. We can see that on the chart. So we know there's buyers here. We know there's buyers there. If we want to sell it, where's it going? It's easy. But what you don't want to do is get it wrong. You have to get it wrong to get it right. You're either lucky and you flip the coin and the heads is right, or you're unlucky and you have to deal with it. That's our job, dealing with it. There isn't a way to get into the market at work and just make it work. Can't be done. Well, if it can be done, someone teach me, because I haven't. 15 years I've been looking for it and I haven't found it. It's called the Holy Grail. And it's often the case with people speaking the truth are less heard. Yeah, it is. But I don't care if people don't listen to me. I'm not in this to make money. I'm in this to keep myself accountable, and it's a boring job. I love doing this, because if I wasn't doing this, I'd be sitting here looking at this. So it's much more fun having some interaction with other people. I used to spend a lot of time in Discord channels, Telegram groups. I spent way too many years on Forex Factory talking to people. And when you are in those places, they are all toxic, horribly toxic. They're either toxic in the fact that everybody else is right and you're wrong, or they're toxic in the fact that there are too many incoming signals for you to be able to cope with. There's over, I can't remember the last count, someone, I don't think this is right, but it was in the millions. I think there's something like 2 million indicators for MT4. If you wanted to test every indicator for MT4, you'd die before you found one that worked. Forex Factory. We looked at this the other day, didn't we? There's 3,289 trading systems. It would take you 247 years to go through all the trading systems on there. None of them work. But it would take you 200 years plus to go through all those trading systems to discover none of them worked. If you spend any time in here, you will never make money. All that you will have is people throwing, this works, this works, this works, this works, and you will just try it and fail and try it and fail. And that's all you will do. You'll repeat that cycle. You know, there's people here that have, I mean, there's names coming up here I can see that I knew years ago, 5, 6, 7 years ago. Same people. Yeah. And they're on different threads. This is how I know none of it works, right? there's one person in particular who haunted my groups for a long time. He's probably sitting in here haunting my channel now. But he's a well-known troll on here. He's been in every single group and interacted in virtually all of the groups. Why? Because he hasn't found anything that worked. If he had, he'd be bloody doing it. And the worst thing is he comes to my group and then hops off somewhere else. If you can't get into a position, get it wrong, and then get it right, I don't know how else to help you. Anyway, but yeah, I have to say though, I found my mentor here and he sent me off on my way. So you might find someone in here you click with that helps, but look, my Ultron EA for pound US dollar 2018 some of all the stuff in is so old, a lot of it. So the Ultron EA, look at the back test on the Ultron EA. Let's do this. This would be fun. You see that profit curve he just showed us on the Ultron EA? Let's see if the Ultron EA works, shall we? Ultron. What's the inputs? Lots, 1 hour, hour 1, hour 2. Oh, that's easy. No inputs. So it's literally just put it on the chart and it makes money. If this works now, I'm going to kick myself. What time frame am I going to be on? Pound US dollar, 1 hour. Less than 100 lines of code. Here we go. Pound US dollar, 1 hour. Let's start in 2016. Let's make some money. I'm going to delete this stream if this works. Two for 2. 3 for 3. Loss. Let's speed it up. So in 8 years, it made 2 grand. Yeah. Right. Let's look at this in detail. This is exactly what I was talking about. 2018, right? When's that back? It doesn't tell you when the back test is. Oh, here you go. Graph below is showing 2011 to 2018. Okay. Have I got data going back that far? Right, made profit. But look at that. 2011 to 7 years, yeah? Look at the stagnation on it. You didn't make money for 5 years? Yes, it had a lucky run in 2017, 2018. Let's see what happened after 2018. So 2018 had a run up, we know that. 2019, it lost money. 2020, it had a pretty good time. Since COVID, it's been losing money. If you joined this, you would have been going through this, through this, through this. By the time you got to page 119 and were sold on it, you'd be trading the strategy. You'd be trading the strategy for 3, 4, 5, 6 weeks. It would probably go like that. And you'd be like, nah, what have you lost? 6 weeks of your life. 6 weeks of your life. You do this 5 to 6 times a year on any one of those 3,289 trading systems. In 5 years' time, all you will have done is tested 50 failed trading systems and lost probably a load of money in the process. That's what happens in this thing. You get sucked in to something. I just picked that one at random because it's on this page, which means that it's got a recent reply. So it's still an active. It's 2018. I've just proven it doesn't work. And it's active. People are still talking about it. TMS. This has been around for years. This guy's dead now, I think. I think the guy that made this system passed away and it got taken over by trolls. But the 7,388 pages. 7,000 pages. And they're still posting on it. Still posting on it. Look at it. It's 3 indicators. There's a TDI, a stochastic, and the TMS indicator, which is obviously some proprietary thing, mixed with a probably a super MA or a Hull MA, and fractals. Drawing a load of crap on the chart, and it will give you a ping or a ping, and then there's a 50-50 chance of that working. I mean, this is the thing. Everything in here is so complicated. It takes you a week or 2 weeks of your life to figure out how to trade the thing. And then you've got to read 7,000 pages of stuff. You just get lost. It's the worst place on the planet. I'm building my own calendar so that I don't even have to show this page anymore because I hate it so much. Forex Factory. It's just the bane of my life. For 5 years of my life, I spent trawling this thing. And it gave me absolutely nothing but the mentor that turned my life around. But if I hadn't joined his group and asked him one question and him answer it in the way that he answered, I would never be where I am today. Yeah, basically told me to piss off. The question I've asked has been answered already, and it's in this thread. And I'll show you which thread it was. And it's still going. And it's 911 pages. But when I was here, it was 1,087 pages. And even that was too long. But that strategy doesn't work either. So don't go and do that strategy. That's where I get the moving average, what's called the strat shadow from, which is the MAs. Yeah, strat shadow. The way I use it is totally different, and it's nothing to do with the way that he uses it. But he was taught by somebody that, again, was from a banking background, and they told him, and this is the worst example of it, but they told him that all they ever do is when this thing goes green, they buy it, and when it goes red, they sell it. And that's all they did. And they made money. And you know what the turtles did? You've heard of the turtle traders? Yeah. But they were trading daily charts. They were trading 2153 crosses and things like that. And they were trend traders. So they would get in, they would hold it for weeks. It's investment, not trading. It's different strategy. And that's what works. Why do you think people like Warren Buffett are not 5-minute intraday traders on the futures market? It's not where the money's made, is it? High time frames and realizing that you just got to wait for price to do what you need it to do, not what you want it to do. Anyway, I've waffled enough. That strategy is a load of crap anyway, so don't get that EA. Get mine. Anyway, so I will be back on Monday. That's all we've got for today. There's nothing really exciting happening. Don't think anything much is happening down here. We've got ever such a weak breakout at the moment on the DAX. Right decision to get out on that. So yeah, it's just not doing anything today. Again, very weak very weak breakout. We've had a less than 1 hour break on the DAX. And we've had a 1.5 hour break on the FTSE. So yeah, waste of time. No news today, so it's just a case of sitting around waiting for stuff. There's no signals on ADR. The RSIs are all falling flat. So just go and do something else. Don't take trades because there's nothing happening. Yeah, you see my P&L. Nothing's setting up. I'm not interested until something does. So wait, be patient. Something will set up at some point, but right now there's nothing much going on. So the only chance I've got is pound Swiss and euro New Zealand today. Oh, the other thing I was going to do quickly was show the other one, wasn't I? Before I go, the hedging strategy. So closed out so you got 2 gaps here. Didn't make any money on Wednesday or Thursday and made money today. That's because the hedges that I got into on Tuesday both went into drawdown, and today they both came into profit. So it was the pound US dollar and euro US. So you can see the trades there. So that was the hedge taken on Tuesday. So the pound US dollar went up and the euro US dollar went down. Done. Out. Profit. So there's no point in resetting the hedges today because we've got no news today. So there is US move with this. I mean, there is a chance that Michigan might move it. So if you wanted to get into a hedge today, could get into a hedge and hope that 3 o'clock University of Michigan moves the market. But the whole edge of this strategy, in theory, is that we wait for the market to be moved on news. If there's no news, I'm not sure it's going to play out. So I don't really want to take a hedge every day just for the sake of taking a hedge every day. But so far, 1.5% profit in 3 days. And I haven't really done anything apart from press the buy and the sell button 3 times at random. And I picked the direction at random as well because it doesn't matter, it's a hedge. So there you go. Is Tick Story a good option for data? I don't know. I've only ever used Tick Data Suite. So in my opinion, and this is just my opinion, when you're doing back testing, there's 2 things you want: simplicity and accuracy. Yeah. The reason I use Tick Data Suite is because it fully integrates into MT4. Yeah. When you install Tick Data Suite, you get this appear and you have complete control of tick data, all data. Yeah. And you can download data from multiple brokers. Yeah, so that's the reason I use Tick Data Suites. Yeah, because I can download data from all of these brokers going back to 2011. So I've got 15 years odd plus on most brokers, 10 years on some, 5 years on others, but 20 years on some data. Dukascopy is probably the most reliable source of data out there as a broker. Alpari are really good, FXCM are good, DarwinX are brilliant. They've only got 5 odd years though. But I just press this button and it's all there. Yeah. So I've got tick level data going back decades integrated into my MT4 terminal that I can also fine tune, manipulate for all sorts of different settings. That's why I use it. All the others, you have to download files, import them into history, do this, do that, do the other. Can't verify the data. I don't know. For me, this is just really, really simple. Yeah. So it's eareview.net. And it costs money. But if you're serious about back testing, yeah, if you can't afford 26 quid to verify what you're doing, you shouldn't be doing it. I do yearly. I pay 155 quid a year. It saves me hours. If you need to install a new terminal, right, your data's gone. Yeah, with Tick Data Suite, when you install a new terminal, Tick Data Suite is auto installed into your terminal, and all your data's there instantly. I've got 5 terminals on my machine here. Yeah, if I open up another terminal here and go to the tester, Tick Data Suite's there. If I open up this terminal, go to the tester, Tick Data Suite's there. Yeah, this is DarwinX. This is another terminal with RoboForex. This is another terminal with RoboForex. If I install a new terminal with FTMO today, it will have Tick Data Suite. Yeah, it's just super simple, and it's 150 quid. It's just not. It's a no-brainer. You know, it's just, you know, simplicity is what you want. You don't want to be spending hours figuring crap out. Yeah, it takes a long time to figure this industry out. The last thing you want to be doing is figuring out how to get data into something to figure out how to trade. Forget the data, let someone else deal with the data. And the other thing about the Tick, I don't know if you can do it a Tick story or not, but with Tick Data Suite, obviously because you've got multiple brokers, if I want to backtest a strategy, I can backtest this strategy now, Ultron, on Dukascopy, and then I can switch over and go, do you know what? Let's pretend I was trading with DarwinX. See what happens on DarwinX data. If I get a completely different result on DarwinX to what I do on RoboForex, there's something wrong. Well, there's not necessarily something wrong, because no broker is going to quote you the same price, are they? So if you're trading hourly, 4-hourly, or daily charts, there's going to be slight variations. If you're trading 5-minute charts, those candlesticks are going to be totally different, which is why 5-minute timeframes are so difficult to get right, because it's chop. Hope I make enough for a holiday in the UK. That would do. Everybody does this for a different reason. Yeah, you don't have to do it for a living. You can do it for whatever reason you want. But bear in mind as well, just quickly before I go, coming back to this thing here. Yeah. The vast majority of the people hanging out in here are not trading for a living. They are also not trading to earn regular income in any shape or form, additional income. They're trading because they like it. Yeah, it's a very dangerous thing to follow somebody that trades because they like trading. Yeah, I've had people in here tell me outright, yeah, I only do this for a hobby. I find it addictive. Do you really want to listen to that person? No. Because they're interested in getting it right. Hey, I've just got 7 trades out of 10 right this week. Yeah, I could also play video games, but that isn't going to be a long-term thing, is it? Yeah, so you'll follow people for weeks or months and then figure out that they're not doing this for any other reason than they want to try and crack the market. You can't crack something that's random. So just be careful with that. It is a very slippery slope, unfortunately. Anyway, right, I'm going to leave it there now. I'll shut up. I've been talking too long. I'll be back on Monday, usual time. Nothing changing next week at the moment. So back on Monday at 8 o'clock. We'll look at next week's fundamentals, see where everything is potentially going. Quick look at what we got next week. There's no news on Monday. Nothing to worry about on Monday. We run straight to CPIs on Tuesday. So PMI week, innit? Yeah, so big week next week. We've got FOMC as well on Wednesday, where the Fed are going to tell us to change their mind and they're not going to change the interest rates. So yeah, next week could be hectic. We'll see. Certainly need some volume, don't we? Because there's not an awful lot going on. All right, so have a good one. Anything you need, let me know. I'll be in Telegram or Discord. Other than that, I will see you next session. Have a good day.